Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video, currency breakdown of the USDCAD. But before we get started to break down this currency pair, and before we get started to break down this chart, we have to say that this information is for economic purpose. This information is for educational purposes only. This is not financial advice. But we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and that can help put some extra money into your pocket, especially during these hard economic times of uncertainty. Okay. So with that being said, let's go ahead and dive in to what is happening on the chart and with this currency pair, okay? Now, before we discuss what is physically happening on the chart, we have to discuss what is happening with each currency respectively, because always remember, it is the fundamentals, the economic events, and the strength and weakness of a currency is what dictates what direction the chart is going to move in, okay? Technical analysis is the last thing you do before you place your trade. It is never the first thing you do. That's the reason why a lot of people are not successful traders is because they they use technical analysis above anything else, okay? When it's fundamentals that dictate what's going to move a chart, okay? Because you have to remember the charts are nothing but a reflection of what is going on in the world. That's it. And that's just information. Okay. So let's break down each one of these currencies, starting with the CAD. Okay. So the CAD has several different factors that's going on with it. All right. We did have some CAD news come out this week. Throughout the trading week, we had some CAD news come out on Tuesday, which was some negative news. Indeed, we did have some positive news come out about the CAD, and we're looking like we're going to have some news around 8:30 this morning Eastern Time prior to the opening of the New York session about the USD2. That's going to be dealing with this unemployment. Okay, so we're going to see half these unemployment numbers come out to affect the Canadian dollar and to see how it's going to be affect the Canadian dollar strength or weakness. All right, but CAD, the Canadian dollar, has a traditional relationship with oil, okay? Because one of Canada's major exports is oil, okay? Now, America is actually about to start getting a lot more oil from Canada as well to try to help with the high gasoline prices here in America, okay? And that just shows you how much oil Canada produces that it can supply us, its neighbor, with the oil that we're lacking to try to bring down our prices. And Canada loves it. Okay. So, one of the traditional relationships between Canada is the relationship between oil and Canada. Okay. So, when oil prices go up, the Canadian dollar tends to go up. When oil prices go down, the Canadian dollar tends to go down. So, even though we've seen a lot of uh, good economic news. We did have some poor economic news come out, but we had a lot more powerful, strong economic news come out about the Canadian dollar than negative. We still seen a weakening of the Canadian dollar, especially against the U.S. dollar, because of oil prices. They released oil news yesterday uh at 10:30 Eastern time Wednesday 10:30 Eastern time going into the New York session, which basically stated that oil circulation around the world increased, which brought down the value of the oil per barrel, which means that oil per barrel took a hit, which means that was a weakening of the Canadian dollar. Okay, so this is why against the USD it has been performing weakly. All right, now with the USD, it's a little tricky situation because the USD typically does not have. There is a relationship between the USD and oil, but that's more of the USD being a petrodollar. But it being a petrodollar does not dictate its strength or weakness or valuing or devaluation. Okay, what happens with the US, reason what's happening with the USD is more of a non-traditional, unorthodox relationship with oil due to how high gas prices are. Because being that high gas prices are taken away from dollars getting spent in the stores because they have to get spent at the pump, means that the USD becomes weaker as oil prices get higher. Okay, and the USD gets stronger as oil prices get lower. Okay, and that's kind of a non-traditional, and the reason why we're in this current situation is solely due to the high gas prices that we're experiencing here in America, which these high gas prices is also catalyzing inflation as well. Okay. And these high gas prices has nothing to do with any economic events. It's more so it has to do with geopolitics. Okay. So basically with this currency pair, the USD and the CAD, it's in a very unique situation where both currencies hang on a pendulum based on what's happening with oil. So if oil prices continue to go up, we're going to see a weakening of the US dollar and a strengthening of the Canadian dollar. But if oil prices go down, we're going to see a weakening of the Canadian dollar and a strengthening of the US dollar. Okay, so when you're dealing with the USD CAD chart, you're really going to have to check to see what is happening with oil. Okay. Now there's a lot more to it between the relationships of Canada and oil, but for the most part, this is with enough that you need so you can be able to trade this chart effectively. Okay. You need to see what's happening with the price of oil to let you know what is exactly happening with each currency respectively. Now remember, during normal times, it does it so much during times of non-inflation high gas prices. That relationship between the USC and oil does not exist. Okay, but in this type of economic situation in these days, it does exist. Okay, so you have to take that into consideration. Now let us talk about the technical analysis that is happening on the chart. Okay, so as we can see, we were in a downtrend for quite some time. And that downtrend was catalyzed by the Russian-Ukrainian war, the sanctions that was put on Russia that artificially decreased the oil circulating supply around the world, which brought the oil prices up, and that was due to the Russian sanctions. And also throughout all these events, we did have an attack by, I believe it was terrorists. I don't know the exact group, but the way they labeled it in the news was terrorists attacked a Saudi state-owned oil refinery, which also caused a decrease in circulating oil in the market because they couldn't put out any oil due to trying to basically take care of that terrorist situation in which the Saudi state oil refinery was attacked. So those things started to cause the oil prices to increase, in which the Canadian dollar became strong, and then when it became strong, this chart started to drop. Okay. Then we had a range out because we had a lot of indecisiveness that was going on with both currencies and with oil. Then eventually we did have a pickup towards the downside at the beginning part of this trading week, and that was because oil started to creep up a little bit. But then once we started to make that deal with Canada, in which America said it was going to start to get a lot more of its oil from Canada, we did start to see a pickup in price because us getting more oil from Canada puts more oil in circulation around the world, which means price starts to drop. And when we got that oil news during the beginning to mid part of this trading week, which showed us that the oil supply around the world, its circulation increased, that brought down the oil per barrel price, which means that we've seen a strengthening of the USD and a weakening of the CAD, and we started to head towards the long side as you're currently seeing. So as we stated in earlier videos, when price was around here, that we could get to here or possibly even here. So we got to this area here. Okay. So we're going to be anticipating a price drop soon because remember, like I've told you in previous videos, that that charts are not unilateral. They just don't go up. They just don't go down. You go up, then you go down, then you go up, you go down, you go up. Okay? Or you go up, you go down, you go up, you go down, you go up, and you go down. Goes both ways. Okay? So with this chart, right, we're more so focused on the short term, the intermediate, so we can get in and get out these trades and be profitable. All right, what we're going to have here is we're going to have, like we got to push up to here. We could get push as high as here a little bit before we start to range out and go down. We could go as far as here or go as far as here before we continue to go back up. In this situation, this will be the range. This looks like we're developing a high here. We're going to develop a high low. We don't know how high that high low can go. We can go as low as here, or possibly even here. If oil prices start to tick up a little bit, we could drop a little lower to right here before we continue to head towards the long side. Okay. But if oil drastically changes on us and we start to see increasing prices of the oil, in that situation, what we're going to have is here. We'll go up here, possibly go up a little bit more, come down very aggressively, range up, pathetic uptake, and then start to come down. Okay, those are the two more likely scenarios of what's going to happen. So if current fundamentals hold and oil prices continue to drop or kind of stagnate where they are, we're going to have a drop to either this general area here or here before we continue to head back towards the long side. But if oil prices start to pick up, we're going to have a aggressive drop here, weak pathetic price push up to here, range, what's my cursor? Okay, let me start this over. Okay, if the oil prices continue to go up, we're going to have an aggressive drop here. Okay, pathetic weak push up to this general here, range out, then start to come down to more once we get to this area here, have a pathetic weak push up, then start to go down. But the more likely scenario is that oil prices may continue to drop or at least stagnate from here because America is about to be having this midterm elections very soon in the next couple months, and going in around November, and I'm pretty sure they do not want it. The people that hold office, they do not want to get blamed for these high gas prices. So I can see this more so going towards the long side, just so it can help their further their political careers. Unfortunately, these are the things that dictates our economics. Hope this information was helpful for you guys. Happy trading.